Not every property type works equally well for first-time joint venture investors. Let's break down the reality of what you'll encounter in the BC market. Duplexes, triplexes, and homes with legal secondary suites or laneway houses are often the dream for a reason. The biggest advantage is having multiple income streams. If one unit is vacant, you're still collecting rent from the others. This effectively cuts your vacancy risk in half compared to a single-family home. However, these can be cost prohibitive depending on which area of BC you're looking to invest in. Next, we have single-family homes. These are generally simpler to manage with just one tenant relationship and one lease. But remember, if that tenant leaves, your vacancy is 100%, you have zero income until you re-tenant. In BC, where mortgage payments are substantial, a vacancy period is a serious cash flow risk. If you go this route, ensure your reserves can cover a 2 to 3 month vacancy without you or your partner scrambling. Condos and strata properties offer lower maintenance because the strata handles the exterior and common areas. They often provide a more accessible price point, but there are critical considerations to keep in mind. Strata fees are a real expense that directly affects your cash flow. Get the exact amount, never estimate. Rental restrictions are another factor. Some BC complexes limit the percentage of units that can be rented or restrict short-term rentals. You must read all the strata documents before making an offer. The bylaws determine if your investment strategy is even legal. Watch out for special assessments. Significant one-time charges for major repairs that aren't covered by the contingency fund. Always request the depreciation report and the contingency reserve fund status to ensure the strata is well run. Townhouses are a great middle ground. You get more space than a condo and some strata protection for maintenance. They often offer a better price to rent ratio than a comparable detached house, though similar strata rules apply. Finally, let's talk about age and condition. Older properties in great locations can be fantastic investments, but older means potential capital costs. Think aging roofs, furnaces, or plumbing systems. Be particularly wary of knob and tube wiring. Many BC insurers simply won't cover it. Factor every visible capital need into your offer. If the roof needs replacement in 2 years, that cost is coming. Either negotiate it into the price or reserve for it ahead of time. It should never be a surprise.